Welcome to the stock play of the day. Today's stock is Costco. We'll discuss should we pass or should we play? Hello, my name is Brian Overby. I am the senior options analyst with Ally Invest.
And I'm Lindsey Bell, Chief Investment Strategist with Ally Invest.
Well, Lindsay, we finally got a down day in the marketplace in 2020. The market's been fairly bullish. I actually see the VIX index approaching 18. It's one of the it is the highest level of the year so far for the VIX index. So there's a little bit of fear going on in the marketplace. What's driving this?
Oh, yeah, there definitely is fear. I know you've been waiting for a day like this for a long time. We haven't seen this number on the VIX in quite a while. It's been pretty subdued marketplace, pretty calm for investors. But that coronavirus coming out of China is really shaking investors today. Over the weekend, we learned that about 81 people have died from this new virus. There's almost 3,000. We're getting very close to the 3,000 number of people in China that have been impacted by this virus. So investors are really uncertain to how this is going to impact growth in global markets. So you're seeing red across the board. But before we dig into the markets, I just want to remind our viewers that at the end of the show, we're going to take your questions. So why don't you go ahead and write the questions on the right-hand side of your screen there that come to mind as we go throughout the show, and we'll be sure to get to them at the end. All right, digging back into the market though, Brian, like you said, we see a lot of red across the board. The S&P 500, the NASDAQ, the Dow, they're all down today by quite a big amount. The Dow's down over 400 points. And the market doesn't really seem to care about any economic data or earnings that are really coming out today. And it's going to be a big week for both of those things. It's really all about what's happening with this new strain of virus out of China, the coronavirus. I went back and I tried to look at SARS, what happened then in the 2002 to 2003 time period, where that virus really took hold. It ended up with 800 fatalities and 8,000 people infected by the disease. We're not quite there yet with coronavirus. The World Health Organization, the CDC, they're still evaluating things. They haven't really announced this is a global problem just yet, but it's something that investors are really worried about. Like I said at the start of the segment here, it's really going to impact what global growth happens. China is, facilitating an easy landing as growth slows over there. This is going to have a negative impact on that. I've seen different economists estimating that this could have a 1% GDP impact either in the first half of the year or for full year 2020 in China, which of course will then impact global growth, which everyone was expected to see to start to turn around here in the next couple months. Manufacturing data overseas, and especially in the Asia area, was starting to seem like it was stabilizing to improving, and we're expecting that to shift all over here also into the US, into our manufacturing sector, which has also been very weak. So this is probably going to put that recovery on hold for a short period of time. At least with SARS, it took about 5 months for the market to really fall and stabilize before it continued to move higher. The impact there, really, we saw a significant impact in airlines, travel stocks. The airline stocks were down 30% at its peak decline during that 2002-2003 period when SARS was front and center. Oil prices declined about 20%. So if this thing continues to build, we can continue to expect to see that type of performance in the marketplace, at least in the near term. Hopefully things don't escalate that significantly, but I think given the uncertainty, investors are kind of in a wait and see period. So I know you're looking at the chart of the S&P 500, and you drew a trend line there a couple weeks back when we first started the show, and we broke through that trend line today, Brian. What's that mean?
Well, yeah, if we look at the S&P 500 index, actually, I didn't even have to adjust it, but we kind of were in a channel from October all the way up until now, and just recently broke below an important level, the 3250 level thereabouts. The market opened down below that today. Now, What and if you see on our graphic here, I'm actually kind of pointing at that level, and this is where the markets are trading right now, real time. And if it continues to stay below that level, well, that's not a good sign for the markets overall. We got the VIX index increasing up, pushing 18% implied volatility. That another way to look at the VIX index is to think of it as the fear index. It means some people are finally getting nervous in the marketplace. There's been a lot of complacency up until this point. And so I think that that's going to be a fairly decent level today to keep an eye on to see if it does close below that 3250 level. And if so, then who knows where the next trend might start from that point on. So the closing number on the SPX I think is going to be fairly important today. Let's get into Costco
Yeah,
stock of the day.
definitely. Let's get into Costco, the stock of the day. I'll take a fundamental look before you dig into the options there, Brian. But I think we're seeing this is one stock in the market today that actually is in the green. And part of the reason Brian and I decided to take a look at this stock today too was as we watched news over the weekend, where we thought, hey, this could be a defensive play as investors get more nervous. Usually, you see people invest in stocks that either are high yielding or have some sort of defensive feature to them. And Costco is one of those because you can go in there and you can buy all sorts of great things from foods to clothes to other discretionary items at a much cheaper rate, but you have to pay that membership fee first. So when we take a look at the stock here, it had a great run overall in 2019. It was up about 45%. At the end of the year, it kind of lost some of the momentum it had at the beginning of 2019. But once we got those December same store sales in early January here, you can see on the chart that we have up, that stock was off to the races. We're up over 5% on a year-to-date basis. The S&P 500's up about 2%. So investors are betting that the sales momentum that we've seen in December after a kind of disappointing November report from a same store sales perspective. Hopefully, the momentum in December is here to stay. In December, what we saw was an acceleration in traffic. We saw an acceleration in the average ticket. So, the average bill that a customer paid when they were checking out at Costco, those numbers increased significantly. Their e commerce site saw sales fly through the roof. They were up about 43% in December. That, of course, was impacted positively by a shift in the calendar where Thanksgiving was a week later than it was the year prior. So that pushed a lot of sales into December. But excluding that benefit, which was about a 20 percentage point benefit, online sales were up 23% in the month of December. And that was a big acceleration from what we had seen for several months. That gets us back to where we were in July and August of last year. So we're going to want to see if that momentum can keep up into the month of January. And it's natural for sales momentum at these retailers to kind of take a step back in the month of January because consumers, they go out there and they shop for the holidays in December and they kind of need to take a break and pay the bills in January so that they can continue to shop throughout the rest of the year. So we wouldn't be surprised if you see a little bit of a step back in those January numbers. But these guys, they're early reporters. They're off cycle. They actually reported their first quarter earnings in mid-December. It was a good report. Earnings beat. There was a slight miss there. But overall, it was a good report, and margins led the way. They saw margin expansion. That's something we're going to expect that they'll be able to continue through this quarter and hopefully through the remainder part of the year. That's a big part of their story. They're seeing some major price competition from Sam's Club for one, where they're investing in their price. But on the quarterly earnings call, the management team said that's having no impact on their business, which is exactly what we want to hear as an investor. We want to make sure Sam's not taking share from these guys. So anyway, the stock has done well, like I said, on a year-to-date basis, but we always like to take a look at the valuation. I'm a big believer in what is valuation telling us, because you can't just buy a stock only because there's momentum there. We want to make sure the fundamentals make sense. And certainly they do have positive things from a fundamental perspective going for them. And when I went to look at earnings estimates based on Capital IQ consensus estimates, we're looking at on a calendar year basis, top line growth of about 8%, which is pretty solid within the retail space. If you think about some of the other people that they're competing with, when you think about retailers, bottom line growth is going to be a little bit more moderate, around 5 to 6%. So that gets us to a valuation of about 35 times on a PE basis. So that's about a 25% premium to the historical average. So it's definitely an expensive stock. But if we're in a period where the market's going to begin to see some weakness, and this is a defensive stock, and we expect many investors to really rotate out of the growth and cyclical stocks that they moved into at the end of last year when the S&P 500 was up 10% in the last quarter of the year, led by technology and financials. We could see that rotation reverse now if this coronavirus really puts a growth scare on things and into companies like this, more back into the staples, back into utilities, back into REITs. The dividend yield on Costco is under 1%. It's about 80 basis points. So it's nothing to write home about, but there's been rumors and speculation for quite some time now that management might actually announce a $10 special dividend, which would be greater than 3% on a yield basis for this stock. So that would be a really nice treat for investors that own the stock at the time of that issuance. And it's something to consider, especially in this type of environment. But so the fundamentals look pretty decent and sound. It's an expensive stock though. So Brian, what are the options? Tell us, is this something that we can play positively or negatively in the options market?
Well, you keep mentioning that it's a fairly expensive stock, and in some aspects that helps us out in the options world, in that the actual price of the underlying is over $300. And when you're talking about stocks that are over $300, the options in general are going to be more pricier than, for example, a $50 stock. The fact that the underlying is over 300 adds premium to the option contracts overall. So if we look at the Ally Invest option chains that we have here, we see here's the current quote on Costco. The markets are open and they are rocking right now. Last trade was 311.24. It's up 73 cents on the day. We see that they've announced earnings recently, so the next earnings date is not until March, but they do pay a dividend. It's a 65-cent dividend. As you mentioned, it's not on a percentage basis. It's not a huge thing as far as the price of the underlying stock is concerned, but it is a 65-cent dividend, so it's you want to be aware of it because it does affect the option prices. So by looking at the fact that this is a little bit overvalued, we're not quite sure where the markets are at. I think I want to look at a strategy that's going to take advantage of the fact that we are not going to be, we don't have to deal with earnings. We have the same store sales. I think some sales numbers are going to be coming out February 5th. But with that being said, we don't have the increased implied volatility because of an earnings. And we're going to totally avoid that. So we're going to go out to the expiration just before the earnings. And if I click on the expiration chain, you see that we have highlighted February 28th. So that's the expiration that we're going to deal with. And we're going to pick a strategy that's neutral to bullish. In other words, if the markets just kind of stay where they're at, and I think it's very big that on such a down day that you're seeing Costco actually up. Now it's up 65 cents on the day. That's obviously a positive sign for the stock overall. And so because of that, we're going to actually look at a short put spread. A short put spread means that we're going to sell a put, and that's going to be the driving factor in the strategy. And then we're going to buy another put, a cheaper out of the money put, as protection on that strategy. That means that if the stock just stays where it's at or it kind of drifts a little bit lower, a little bit higher, this strategy will benefit just from time value decay in the option contracts. And there's a lot of time value in these options just because, as I mentioned, it's over a $300 stock. So if I look at the strategy inside the chains, here's what we see. Let me emphasize on the short put spread. On the options playbook, we actually see the short put spread, also known as a bull put spread. We're going to be selling the strike. Strike B is going to be out of the money. It's going to be below the current stock price. That's where all the risk comes in. The protection that we buy is strike A. That's the strike that we're going to go down a little bit further, take some of the premium that we received when we sold that put option and buy some protection just in case that market does collapse heavily. We have an out, if you will. So our our defined risk is going to be the width of the strikes minus the premium brought in. Okay, so if we go back to the chains and we actually look at the strategy that we're going to do here, we have 32 days remaining to expiration on this February 28th expiration. We're totally avoiding earnings. So the stock's at 311.25. We're going to go down to the 295 strike. And if we sell that 295 strike, we can actually get in a decent premium. Looks like what we'll call it $1.70 here, fairly close on the bid. It's $1.69. We'll round it up to $1.70. And then we're looking to go 5 points down and then buy the 290 strike. And that's going to be our protection leg on this trade. So if we look at this trade overall, and we'll pull up the profit and loss calculator on it, we see that we're doing this trade for about a 60 cents net credit to the account. Now, remember, we're going to work it around the midpoint, but we can't always guarantee a midpoint fill. And as always, here on Stock Play of the Day, this isn't meant to be a recommendation. We're just trying to learn from the strategies. We're trying to look at, well, based off of the market scenario, what are one of the 40 plays that are inside the options playbook that might apply to this situation? And that's what we have going on here. We're neutral or bullish. Markets have came down quite a bit, but we got a stock that's actually holding its own. So because of that, we sell this short put spread. We're hoping to bring in a net credit of 60 cents to the account, somewhere in that range. And if we do, that's going to be our maximum upside, is that 60 cents. We're 5 points wide. That means that's our max risk. We could lose 5 points on this trade, but obviously we have a 60-cent net credit that comes to the account. That means our total risk is $4.40, which is that 5 points minus that net credit, $4.40 overall. So we're defining our risk. We're hoping that the markets at least stay where they're at in Costco or drift a little bit higher. That would even be a better scenario. And we have our risk reward defined here. So let me go on in and look at the actual profit and loss graph inside the Ally Invest option chains. And we see now this is where the stock is at, as opposed to inside the options playbook, optionsplaybook.com. We were seeing at expiration, we've just seen a generic trade. Here we actually see, here's where the stock is at right now, the underlying at 311. We're all the way down here at 295. So we got a nice little buffer zone. If the stock lands anywhere in between here at expiration, we can make the maximum on that trade. Now, if I'm doing this trade for a net credit of 60 cents to the account, I don't necessarily want to make that entire 60 cents. If I get to a point where I could buy that back for 20 cents or I could buy it back for 15 or 10, I'm going to do that. I'm going to take that risk off the table. It could be trading somewhere in this range. If the market took off and continued on up and went up to 315, 320, well, all right, maybe I'll stick around and see if the entire trade will expire worthless. But I always would prefer to take risk off the table. Usually trying to get that last 10 cents or 15 cents isn't worth the actual risk of that profit or of that ability to make those type of money on that trade. Now on the downside, if we get down into this range, all right, if it happens right away and it goes all the way down to the 290 strike, well, we're going to want to get out almost instantly. 290 is where our protection is at, and if there's some time premium left in the option contract, it actually helps us out more because we own that option contract. But you could also put a price on it. A lot of people, if we're looking at this and we're saying, well, my max upside is 60 cents, if I'm down more than 60 cents, I want to get out of the trade. It's up to you to determine where your risk would be on it, but that's the way that I would approach it. We do not have earnings, so we don't have any major news except for those sales numbers that I was mentioning in February. But besides that, there's nothing major that is supposed to be coming out before this expiration date. So let's go back and recap it. If we look at the Ally Invest trade ticket here, this is actually the full trade ticket. What we're looking to do is we have a February 28th expiration. We're going over 30 days out in time. We're going to be selling the 295 strike put, the more expensive put. We're going to be buying the less expensive put, the 290 strike put. Net credit that we're going to look at, when we were looking at it on the option chains, it was at 60 cents. We'll keep it there. Our max risk is going to be $5, the width of the spread, minus the 60 cents brought in, or $4.40. And with that, I think we should get to some of the questions. And it looks like we got quite a few of them out there. You can actually write the questions in the box on the left-hand side of the screen, I think, if I'm looking at it. But I got a great question here first. I'll jump in with one for you, Lindsay, right off the bat. It says Blade Fist 2000 PE ratio is pretty high for the category. No concerns about that? Question mark. Walmart is 22. Pretty small dividend compared to the industry. Comments,
Well,
Lindsay?
yeah, I mean that's a great question. That's my biggest concern about Costco. I think fundamentally they're a strong, steady, reliable stock, and I think that is really what matters most importantly when you're dealing with a market that is being driven by uncertainty related to something like the coronavirus. So yeah, the valuation does worry me at 35 times, and again, that's a premium to its own historical average too. So it certainly is something that we do have to keep an eye on. But I think if this market is going to rotate into defensive sector stocks and companies, that Costco is one that really can win. Granted, I think that if you hold it throughout 2020 and 2020 is another good year. Do I think that we can see another 45% upside in the stock this year, like we saw in 2019? Probably not. But I think right here it looks very interesting given the broader macro backdrop.
All right, and then I have another one that I think we can both kind of address. Jack L from Pittsburgh is saying, "Is the sky falling?" And I guess I can comment a little bit on that with the VIX. Well, it's the first time we've actually seen the VIX index in months get up over the 15 level, and I kind of think the 15 level is more of the standard mean. We're now pushing approximately 18 on the VIX index, the volatility index. So I wouldn't say the sky is falling just yet, based off of the VIX. That's still not an extremely high level, and and so until that starts getting up towards the 20, 25 level, then I think you're going to see a little bit more nervousness in the marketplace. But now, as far as just looking at the chart and looking at the economics of the marketplace, what are you seeing there too?
Yeah, no, I was just going to add to that too. I think once you get over the 20 mark on the VIX is when you can start getting worried, but 20, 25, like you said, for sure. Look, this is a one-day big sell-off. We saw a couple days last week, actually last week overall. We saw the market down for the first time this year. There's just a lot of uncertainty out there right now. I think that we need to all stay calm and see what develops with regards to coronavirus. But if, like I said at the top of the show, I likened it to the SARS impact. Well, there was a big negative impact over a very short period of time to the market, and some of the the sectors more related to growth in China or travel to China and commodities that would be impacted from growth out of China. We could see that swift move downward if this thing escalates. But just remember that the market did come back from that time period to rise to new highs. So it's not, if you can withstand the pain and you have a longer term time horizon, it's not probably a time to panic right now.
Right, and I got one more for me. It looks like James C. from Lincolnton, North Carolina, actually writes in and says, uh, "If you're bullish, why won't you just consider a long call?" And I don't mind that on this underlying. Actually, when you consider that it's over a $300 stock, and to buy 100 shares of stock is obviously going to take a good chunk of change. Buying an in the money option contract would be an okay strategy here. Part of the reason why I decided to just go with the short put spread or the bull put spread here is that it's a more neutral to bullish strategy. I kind of want to see what's going to happen over the next couple of weeks. It's going to play out just with the market in general and the fact that Costco is up today, and we'll just kind of let things kind of play out on a limited risk basis, trying to get some time premium decay. Now, I have no problem after getting out of this trade if the market kind of stabilizes and we feel confident going into earnings on Costco, then we might look at buying a call option contract. And here I would actually go a little bit more in the money. I would buy it as a substitute for the stock. So if I go a little bit more in the money, it acts a little bit more like the stock. And it's basically a replacement, a stock replacement strategy then. All right, well, let's get into the summary here. Okay, we talked a lot about the indexes based off of the questions, kind of, but let's just kind of summarize exactly what we talked about early on in the SPX and other
Sure. For the market update, I mean, I think the key out of that whole section was that we got to watch that trend line that you drew, Brian. 3250 on the S&P 500 is really it really seems like the key point that we got to watch, and not just today. I think for the remainder of the week, and as the situation in China develops too. So we'll be keeping our eye on that.
Yeah, that is definitely a level that we want to see. That market has been so strong since October of last year that that number is definitely, it hasn't even really touched. It's only touched that number, that line, a couple of times when setting the channel so far in 20. All right, so then Costco, the stock, quick summary.
Costco, the stock, quick summary, it's expensive from a valuation perspective, but I think it can benefit from any rotation into discretion, or excuse me, into defensive sector. So keep your eye on it.
All right. And then as far as the option strategy is concerned, one of the things about Costco being an inexpensive stock, not necessarily fundamentally, but the fact that it's over a $300 stock, it makes it more interesting to come up with option strategies. And that's one of the things that's great about options, is that even though we're neutral to bullish, we can come out with a strategy that will kind of match our forecast for the underlying. And that strategy happens to be a short put spread. All right, well, that's going to be it for this edition of the Stock Play of the Day. Now, don't forget to click subscribe and make sure you ring the bell to get the alerts going forward for all the stock plays of the day.
And we'll see you next week, same time, same place.
Thanks for coming, everyone.